Hope everybody's still breathing after today. All right. Sorry about the little delay. Sorry about the little delay. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I'm out of Pins, Meta, Microsoft. I got out of a couple other names, but then got back into them as they dipped back down. So that's what I'm left with. And wow, let's talk about it. So how did we close today? We closed up 0.75% for the S&P, 1% for the Qs, 0.8% for the Russell. So seems like a decent little up day. Seems like a decent little up day until you look at how much we actually sold off today. All right. Let's recap it. Let's just take a quick look at the pre-market. I really want to take a look at the daily chart, but pre-market, we're grinding up. We're trading at about 401 and change. Number of hits. CPI comes in light. Market absolutely explodes. Is the degree of that tail real? Did we really hit 414? I'm actually not 100% sure. I guess it is, looking at the other tails in the Qs. Sick move. We pulled back to like that 406, held it, tried to go back higher, and then the market opened up and the market just sold the news. I want to go over to the big picture. Oh, it's a bad looking daily candle, man. It's a bad looking daily candle. So, we're doing the morning meeting. Numbers are already out. SPYs are trading above 410 at that point when we're doing the morning meeting. And, I have to account for all possibilities. Maybe sometimes I should just stick my neck out a little bit more. Maybe some of you guys are even surprised when I talked about the downside scenario, because it could be very easy to just be looking at what that CPI number was, that it came in light, that the market's trading above 410, that we're breaking that downtrend line on the big picture, and just think that we're 100% off to the races and getting that continuation. And that was certainly a possibility. There was certainly a squeeze potential possibility, and you needed to account for that. My continued thought process, I really thought that we were going to have a more muted CPI today, meaning that, like, to the degree to which we miss or beat the expectations of the number compared to the last two reports, I'm not expecting as big of a move on the same amount of a miss or a beat, if that makes sense. Meaning, like, what do we come in under expectations? Like 0.1%? What was it? It was 7.1 instead of 7.2%? Or was it 7.1 instead of 7.3%? I honestly don't remember exactly what that expectation was. But it obviously came in a little bit light there. I think there was even a chart that someone posted from JP Morgan that said, let me actually scroll all the way to the top of the VTF and see if I can find that in there. Really early, someone posted some Fed market expectations. Oh man, it's gonna take me forever to scroll up and find it. But I think it was that guy at JP Morgan, and it was telling you potential percentage moves. I'm not gonna find it. I'm just gonna continue, keep my screen down here. 7.3 and came in at 7.1. Thank you. It was like potential expected moves based on where the number comes in. I feel like it said like we could be up 3 to 5%. Is that it from TG? That's the one. Appreciate that post, whether that was from you. All right. Yeah, so this is just a good chart, I think, for sure. And saying if the November CPI reading is 7.0 to 7.2%, there's a 15% probability of that, and we'll be up 4 to 5%. And I just remember looking at that before the numbers even hit, and my expectation personally coming into this was that we're actually going to start seeing more muted CPI reactions than the last two. Not that they're not going to be big reactions, just that they're going to be more muted than the last two. The last two were completely insane. Complete massive, probably outliers compared to history, and even outliers compared to 2022. And 2022, we know, has been an insane year, entirely characterized by inflation, and CPI has been the most important number of the year. The last two numbers were just so insane. And I'm reading that chart this morning, and I'm just thinking to myself, like I just don't think so. Like 5% up on like a 7.1 reading. That's what this JP Morgan trading desk game plan for investors in CPI would say. I just don't think that that's properly counting in the importance of the new normal of the narrative that the Pro Desk here, our team, has been all over in the month of December as it has started to come online. Which again, it's not that CPI is not important. It is important. It's not that the Fed's not important. The Fed is obviously going to be very important. I just think that we're going to not see the same degree of a movement where we're seeing these $20 moves in the SPYs for the last two CPI numbers in a row. And the reason for that is the economy is beginning to matter much more than the CPI. And then I think that, Pat, I think you posted, it was Mike Wilson came out with a note, and Mike Wilson's usually a little bearish for my taste, but I entirely agreed with what he said, and the market was agreeing with what he said, that we're moving away from the CPI, and it's going to be all about earnings. It's going to be all about how the degree of the negative impact on the increase of the interest rates, and that's what we're looking into for 2023. And the other thing that I've discussed this month is, like, you have all these bearish cases that are out there. Everyone seems to think that the market has to rally in December of this year to some unknown magical high number and then sell all the way back down to SPY 300 in the first half of 2023. And maybe that happens, but if everyone's thinking that we're going to sell down to 300 and it's earnings that matter, the market's a forward-looking mechanism. They're not just going to buy this market up to 430 this year in the SPYs when everyone thinks that we're going to be at 300 in next year. You need to see what the earnings numbers are going to look like in the next couple of quarters. That's going to be the most important thing. And that's also why we're beginning to see the narrative here. The narrative is just changing, right? We're beginning to see where, to a degree, good news can be good news as long as it's not too good of news, and bad news can be bad news as long as it's not like too bad of news, if that makes any sense. Like, if the market is really believing that inflation is going to be working its way down to 3% over the course of the next year and a half, like that's what the targets all actually say, and that the interest rate hikes are going to slow down, the market prices that in. So what they're really going to be concerned about now, once again, is just these economic forecasts. So CPI number comes out today. It's light. They buy us up all the way to 410. There was the potential of these momentum trades that could bring us up to 415 or 417. Short squeezes, break of the downtrend line. Like, there was a lot of important technical stuff there that could have given continuation. But I couldn't help but also throw out the bear side of the thesis in the morning meeting that we could sell off on this number. Now, with that said, I did not think that we would get below SPY 400 today. The degree of the volatility in this market is just so insane that we sold off from a high of 410.50 intraday to a low of 399 and then bounced back to be able to close at 402. Sorry, Mark. So I did not think that degree of selling would come in. I thought, pull back to 404 made logical sense because it is still good news to see inflation coming in at lighter than expectations. We should be higher to at least some nominal degree off of that. I just don't necessarily think that it justifies a $20 up move in the marketplace anymore, and neither does the market. So the JP Morgan trading desk offering their game plan, well, shows what they know. So now here we are at the end of the day. This is a terrible candle. We're right back really kind of in our range. I guess we're above SPY 400, which is a key level. So there is some overall improvement here, and we want to see what this market can do. But this is a negative Maribozu. They sold that news. 410 in the market continues to be really important. It's now our high from post Jerome Powell, and it's now our high from the CPI day, and this is going into the Fed tomorrow. I don't obviously have no idea what the market's going to do. I'm very nervous about the Fed tomorrow, given today's price action, because I don't see Powell coming out. I don't even see him necessarily coming out and repeating things and being as happy as he was on the 30th. I don't think he wants to make these big upside moves for the marketplace. So if he comes out and he's hawkish at all, that could bring us down even further. And if he's dovish, that similarly might already be priced into the market to at least some degree, where we don't see that same degree of upside. So I'm actually very nervous about tomorrow. Today is a negative Maribosi for the market on news, on high volume. It makes the high of that bar very important, and it makes the market, based on candlestick analysis, what I like to say, guilty until it can prove its innocence. Now, we should be doing more than candlestick analysis. There should be trend analysis, and you should say, well, maybe this, holding of support on this pullback here is actually just creating an even bigger picture, higher low for the marketplace, and we can continue to work our way up. And as long as we're above, still above this, SPY 390, which was a very key level for us, that you can err to the side of being long. So maybe that's saying err to the side of being long, but this candle from today is certainly not saying the same thing. So we'll see how the market interprets the numbers tomorrow morning, because a lot of fund managers want to take 24 hours to digest that news before they put any real money to work. And then right after that, we're gonna have the CPI. Not the CPI. We're gonna have the Fed hit at 2 o'clock. I can almost promise you that it's going to be a 50 basis point increase. Jerome Powell really does not like to move away from his forecasts. I think it would be a 50% increase, even if inflation came in at 7.5% today instead of the actual 7.1%. He would still stick with 50 basis points. He really forecasts what he does and doesn't really deviate from it. So we can expect that tomorrow. I think that the bigger event is going to be the press conference. Once again, what gets said, especially in a Q&A portion of it, where he has the opportunity to slip up on some of the stuff he says. It's going to create more volatility, and we're either going to go up or down. So sorry if that's not what everybody wants, that thought process of we're either going to go up or down, but that's all I got for you. We're either going to go up or down when Jerome Powell speaks, or maybe we end up going nowhere with a whole lot of volatility in between. Probably flip long again up there. So that's pretty much all I got for you guys. I was entirely market focused today, just trading the stocks that I'm involved in based on signals from the market. There were a couple pivot points on the way down here that I thought were worth trying. This pivot point I thought was worth trying as the 2-minute was catching up. I really thought that this pivot was extremely important, this 10.05 low. And I remember saying to you guys, when this candle formed and closed, that this low needs to hold. This should be a momentum pivot for continuation as the 80-MA on the 5 has caught up. And if we lose this low, that it means that the odds of new highs coming into the day become very low. And we did lose that low. I know initially, on this candle, when it broke it and tried to snap right back, I was like, all right, maybe they're going to be a little bit loose with it. Let's still watch. Let's pay attention to the IWM. But the Russell really let us down. The Russell was, again, the leading index for the millionth time this year. Just was not giving that important balance where the market was. And then after that, any other long spots that you tried, I really think Mark Newton. I did a conference with him in Guangzhou, China, in 2019. He's a pretty good guy. We chat sometimes. Anyway, and knowing him well enough, I am certain that he's saying that the downtrend is still intact, because it is, and it certainly is. Just ticking up above, you have to close above. Anyway, pulling back here into that equilibrium area on the 15-minute, you maybe could have tried again off of this low. That obviously did not work either. But even if you tried this one at this point, the odds of getting that new high coming in were very low. It was just looking for a bounce trade. And this market honestly was really bad. like way worse than I ever would have expected. Selling off from 410 makes total sense to me. Selling off from 410 and not being able to give an appreciable bounce that fails, like these bounces, and I think it was a good trade to try to go long off of this low. I think it was a good trade to try to go long off of this low. They both failed. That shows you just how brutally weak this market was, that we could not even have an appreciable bounce to the upside that could fail. Like, let it still fail. Give the hammer in the important area. Let the buyers try to come in and defend it and bounce it back to an area where sellers come in and roll it back down. And that's still going to be a failure, but with a big enough of a bounce where we could all be involved and get our risk covered on our trade and stuff like that. And that just did not happen at all. These bounces had nothing behind them at all. Even this is just stabilization for 45 minutes after pure selling. There's no bounce in here to speak of. And then we had another leg down to fill the gap. We filled the gap. That's crazy. That's like crazy. The IWM went red. And then like we had, you know, choppy price action in the second half of the day into the close with a little bit of a bounce. So that's it. And everything I did today was personally off the market, off of signals from the market. I made money today, but I gave back a lot of money, to be honest with you guys, from my highs. And I wrote that into the chat, like, holy cow, I did give back a lot of money today. And it's funny because I gave back a lot of money and I felt that I was actually pretty conservative with my approach. Like I booked the profit into the big move like I wanted to. I rebought. I did some add backs. You know, I tried some of those spots that, you know, we kind of discussed here that failed, and I gave back probably a little bit more than I should have. to be honest, I gave back a decent chunk of change, like, you know, too much. So that's really all I got for you guys. You know, for me on days like today, it's all about the big picture. It's all about, you know, focusing on where we might see relative strength and relative weakness. XLE held in really well. XLF traded really poorly. In the beginning of the day, it seemed like tech stocks were trading best. Some of those growth things were squeezing up, and then those things totally got smoked. A lot of them even closed negative, like DKNG, which is one that I've been looking at in this $14 level a lot. I you know, thing was up at $15.50. I almost liquidated my entire position, and next thing I know, I'm like rebuying stock at 14 again, and I can't believe I'm even looking at it at 14. This DKNG actually looks really bad now, and I'm still in it, but I got to keep it on a tight leash. This should not be trading down and closing down near yesterday's low after this number and the market being positive today. But they really wrecked some of those growth stocks back down. And yeah, that's pretty much it. They've really hit those growth stocks pretty hard. How did our TLT close? They sold TLT back down, which is fine. It's still in its range. The dollar, they bought up a little bit, but it still closed negative. I still feel like, just looking at this dollar, we actually should have been up a little bit more today than we were. But yeah, that's really all I got on this one. Today's high is going to be really important going forward. It's going to be really hard to break too, I think. We might just be stuck in an appreciable range here for a while. And I almost feel like there's a higher probability of us breaking the range to the downside than breaking that range to the upside after this failure. Meaning, like, I almost feel like we're trading at 402 right now, so not quite the midpoint between 390 and 410. But we know from a big picture perspective, 390 and 410 are our really important spots. And even though we're closer to 410 than we are 390, I almost feel like this is a signal that either we continue to get stuck in this choppy range that we've been in for a month, or there's a little bit of a higher probability actually of a downside break after this trend to break failure that we had once again today. With that said, the entire picture could once again change tomorrow based on what the Fed does and says. So we'll see how that plays out. All right, so that's all I got, and happy to take a look at any questions. First thing I'm seeing here is from Dave. 200 moving average on the daily is no longer trustworthy, or still trustworthy looking at the short side? I think it's trustworthy if you use it correctly. So, and I mentioned it real briefly again this morning. The market trading above or below a moving average is not as important as the slope of the moving average. I think it's really important for everyone to understand that. if the market is trading above a declining 200-day, you have a higher probability of that trend that brought it up there failing, meaning going back down, than it continuing. The slope of the moving average is down. That means that the essence of trend is down, and you still have a higher probability of failure. A market that gets below a 200-day that is ascending has a higher probability of snapping back and giving continuation. Now, eventually, trends change, right? At one point in time, this 200-day was pointing up, and as a matter of fact, it pointed up for a very long time. This 200-day barely even had the opportunity to point down on the COVID crash, and besides that, it's pretty much been sloping higher. Last time it sloped down was in 2015. So that's kind of your essence of trend here. But eventually it changed, right? Eventually it spent enough time below that 200-day that it'll enable that 200-day to be able to roll over. I'm confident that eventually it will change again, and the market will spend enough time above the 200-day where eventually that 200-day will roll back up. But I think a good principle for the market that I think will help people generally be able to make money is assume that whatever the current status quo is will always remain the status quo until it proves to you that it's actually different. So right now, as long as I've got this declining 200-day, the better money-making assumption is still going to be to assume that all big picture time frame rallies fail. And only when you actually see the whites of their eyes and the market spends enough time above the 200-day where it's actually able to roll back up again, can you assume that that will change. Only when it's actually shown to you. And that's still the environment we're in. You know, gapped up to 410, declining 200-day, they sold it, and it's not a great looking candle. Appreciate the question, Dave. From Rex. At 1040 to 1140, the market is consolidating below the 830 low. It's above the 830 low now. Would you say it's good to look for a signal to go short? From 1040 to 1140, that's this consolidation here. The low of the 830 move was 141 and change. That's right here. So we were consolidating above that. I don't like this for a short or a long, to be honest. I feel like this is not only is this a coin toss, it's a coin toss that has the ability to, like, I'm trying to use the analogy of a coin toss. It's a coin toss that is run by a guy who runs one of those booths at the San Gennaro feast in New York City that's trying to rob you of your money, where one way or another that coin is designed, or if you choose tails, it'll land on heads 70% of the time. What I'm trying to say here is that not only do I feel like this has a 50-50 chance, this thing could have broken up here and worked our way up and started to retrace a percentage of this down move, or it could have broken down and just been bearish consolidation continuation here, which is what eventually happened. But I also feel like there's actually a good chance of shakeouts, where it begins to break up and then fails, or it begins to break down and then fails, by kind of the nature of this pattern here. So I don't like it on either side, to be honest with you. If I had to choose a side, I'd probably choose long over than short, because it's above the 830 low. That would be the one factor for me where I'd rather be long this than short this. Though of course the short is what actually works there. Hope that makes sense. From Mark, I mean, the 2000-2008 recessions and following bear markets definitely took a while to work themselves out, and the Fed wasn't raising rates, and we had almost no inflation. As earnings recessions is bound to get worse, it's pretty simple math. I don't see anything good medium term. Can definitely have oversold bounces, and recessions are self-fulfilling. Companies pull back, lay off, etc. Yeah, so I definitely agree on recessions being self-fulfilling. I don't necessarily think that all recessions are created equal, and that you can have degrees of the recession. Like, companies are starting to lay off people. It seems like we're seeing a lot of layoffs. In reality, those layoffs I think have been primarily confined to tech. so it's not hasn't been too big. The flip side of the argument that you could make is that those tech salaries are the salaries that are, paying for workers to work at the lunch spot near that office in San Francisco or whatever it is, and it can kind of have a little bit of a domino effect of, hurting other businesses when you start to see those layoffs in what tends to be kind of the highest paying sectors of the economy. So I understand that as well. At the same time, we do really still have a pretty robust labor market, and we have a consumer that loves to spend. We know that they are dramatically and quickly, dwindling down the excess savings that they had accumulated during COVID. But they love to spend. So I think it's just a matter of how fast can inflation come down versus that domino effect that we're talking about comes in and affects the market. And that's where you get into, where all these sell-side analysts are coming in with, their different bear cases or whatever of, S&P 3000, S&P 3200, or potentially even better than that. I don't have the answers to those questions. Don't have a crystal ball for it. But we'll see, what this recession looks like and how fast inflation actually is able to come down and what that looks for the earnings reports of these companies, because I think that a lot of the multiple compression aspect of it is done. And now it's just a matter of the E portion of the PE multiple, the earnings portion of it, how much money these companies are actually able to make, and then a lot of that depends on how resilient the consumer is and how well people are able to kind of maintain their jobs and go get new jobs as necessary. And there is still there's still a lot of opportunity out there to be able to go work. Yeah, I agree with you, Mark. I agree with you 100% on that. How was ice skating? How was the skating date? From Eddie. I like the question. It was fun. We had a good time. It was my first time ice skating, I think, since high school. Do a lot of skiing, but haven't ice skated in a long time. I've always wanted to ice skate, like in Bryant Park or whatever. Never have done it, even though I've lived in Manhattan since 2004. I've never done it. So it was a cool experience to be able to go and kind of rent skates and go do that. Definitely took a lap or two to remember how to do it, but after a little bit, my skating skills were looking pretty good. I used to play hockey once upon a time when I was a kid, but I haven't been on ice skates in forever. So yeah, it was a lot of fun. Thanks for the question. From Mike L. One of the concerns of the market is, why is inflation coming down? For example, in housing and used cars, is because lending is so tight, and that's not good deflation. Yeah, I agree, and that's going to be the type of stuff that has repercussions on the broader market. I still think that that's what the Fed wants, though, inflation down by any means necessary, honestly, and they're trying to, weave their way through a soft landing as much as possible. Well, I mean, we're hiring traders, EJ. That's pretty much all we're bringing in for right now. So, just if you're not currently trading through T3, just email info@t3trading.com, and somebody on the team here will get back to you with information on that. Cool, great stuff. What else, guys? Anything else? Is there anything on the YouTube that anybody posted? I'm not on there looking. But I'm beat. It was a busy day between the market, and I'm just had a lot of between yesterday and today, and tomorrow's probably going to be similar. I just had a lot of like end year meeting stuff that I was having to do, where it's just keeping me super busy, and probably will be a little bit busy tomorrow also. So I apologize for not being on the chat as much as I would have liked today. Question from Sebastian. Do you think we shouldn't have been greedy today? I got TQQQ 2365 at 837. Wow. I bought Netflix at the open too. Once it broke, 328.60. Okay. Sorry, I'm looking at my other chart. I should be looking at this one so everyone can see it. Okay. Daily chart's a little bit extended still. I was expecting continuation and was even more confident before 10 when the market was holding up. I ended up giving back a lot of P&L. So did I. But really wondering if I missed out on something or the market is just really unpredictable right now. Also, what do you think of buying? All right. So, I mean, as far as the first question goes there, Sebastian, my thought process today was that new longs that you're putting on early off the open or from not fantastic prices, like the minute the 8:30 number came out, you need to be very careful with, because you were really relying on pure momentum to pay you on those trades. And that doesn't mean that you can't be greedy on a trade that is a trade on pure momentum, because you can be. You can get massive momentum moves, and then eventually those moving averages can catch up. So I think it's okay to be greedy on the profit side, but where I don't think it made sense today was to be greedy on the like on the risk side. Like, I don't think it made a lot of sense to be buying stuff today when the market opened and using your A+ trade level worth of risk to see if you can knock it out of the park after that big move already happened. And we were $10 extended on the daily chart, and the SPYs from the ADMA once again today, and that's obviously been a big factor for us consistently, where we have not been able to get continuation. I did think that today had the potential to be different if they wanted to squeeze this market from people who are caught off sides as we're getting above a downtrend line, but that didn't happen. Also, what do you think of buying the 1045 inside 5 on the market? 1045 is getting a little late in the day. 1045 inside 5? Oh, the 1040 candle at 1045, I assume you mean. Yeah, it's okay. On the 15, yeah, the 15 minute just caught up there, so you were looking for that 15-minute bounce. That's similar to what I was talking about before when I was just reviewing the meeting here. I think that's a fine trade to take in that area. I just think that you should not have huge P&L upside expectations off of that, because the market sold off too much at that point. But I think it made sense on a few occasions here on the downside to be looking for retracement trades, and those retracement trades just could not come in because of just how brutally weak the market was. So thanks for the questions, Sebastian. Sorry that you gave back too much P&L. If it makes you feel better, I also gave back a little bit too much P&L. But still green. Still green. Green is good. All right, gang. I'm gonna wrap it up there. I will catch you all tomorrow morning. We're gonna have a lot to review again with the Fed. We'll see how we gap. Who knows how we gap tomorrow? Have a great night, everybody. I'll see you then.